Thanks very much for joining us. This is part of the program at the International Investors Lounge. My name's Richard Betts. For those who don't know me, I'm a co-founder of Real Asset Media, and we host this stand. And we're also deliberately, as a media business, we like to think instead of just covering the market, we actually write for and we collaborate with, and part of our aim is also to help support investment, to drive further investment into real estate. So delighted here to be looking at in the next two sessions. The first one is on the living sector, then we're going to drill down into student housing, and then we're also going to look after that at logistics, decarbonisation, and especially decarbonisation in the sense of how, not why, but actually how you do that. And then finally today there's going to be a focus on some of the AI-related technical solutions there are at the moment. So that is more a kind of 5-minute pitch, short, brief conversation, and drinks. So that's the rest of the afternoon. I would like to now introduce Courtney as well. Courtney, who is the editor of Real FDI, which is our publication, long-term Financial Times correspondent and editor, and dedication is here despite breaking her arm last Thursday, and not really legally flying here, actually.
And hello, everyone. As mentioned, I'm Courtney Fingar. I'm really delighted to be leading this panel. I did tell Richard we missed a trick by not having me do a healthcare session in which we could have pretended this was just a prop. But now, if those of you who might have joined the previous session, it was taking a bigger look at the European real estate industry, what's going on and the trends. And as part of that, we heard some bullishness on beds and some positive sentiment about the living sector. So I'm going to kind of read the room here and see if we agree on that, see what the current market is looking like, and of course, projecting our outlook for the future. I'll just mention it is getting a bit louder and rowdier here in the halls. So we do have headsets there. Those are not translation headsets. You can use them to listen to the audio in a clearer form. So if you need those, they're on the tables there. So with all that said, we'll just get into it. I'll first ask if we can just go in a row, and we'll start with here with you, Matthias, and just tell us who you are, who you represent, and kind of the perspective you're bringing to this conversation.
My name is Matthias Euler, working for Greystar. Greystar is one of the biggest managers of apartments worldwide. We are coming from property management, so we manage at the moment roughly 1 million apartments, just to give an idea of the size. We are well known for global capital raising and bringing it onto a local connected base. So we are very local. We have a German team, and we are buying developments, constructing them, ramp up, doing the leasing, and then managing them. So we are in the end a property manager.
Great. Tom?
Hi everyone, I'm Tom Hartley, Managing Director of Carterwood. We provide data and insight into the European healthcare and senior living markets. We're based in the UK, expanding into Europe, and we're starting that in Spain in 2026.
Great.
My name is Britta, Roden. I recently joined Swiss Life Asset Managers as Head of Real Asset Research. We have roughly 300 billion assets under management, and if you break it down into the living sector, it's roughly 30 billion in the living sphere. I've been doing real estate research for many years and also covered the residential sector for many years, so excited to discuss with you what's new.
Good afternoon, everyone. My name is Samantha, Rowland. I am founder and director of Healthcare Operational Living Advisors. Prior to that, I spent best part of 20 odd years at Savills and then lastly BNP Paribas. I set up Euler, which is the short version of the Healthcare Operational Living Advisors, to provide more of a bespoke, director-led, personal approach to our clients and taking advantage of my corporate knowledge into the sector.
Hi, I'm Dave de la Fuente-Hjaltadottir. I'm Director Newly Built Mortgages, ING Netherlands. And together with my business manager, Newly Built, we collaborate with, we first have to seduce them and then collaborate with the product developers in the Netherlands and in Europe. So we help them sell their homes and we provide the mortgages for the customers who buy their homes.
Great. Thank you, and welcome again to all of you. And before we talk a little bit about the outlook and where we are today, let's look backwards a little bit. And I want to ask Britta and Matthias, and others may want to add to this. How has the market evolved over the past 12 to 18 months? Go ahead, Britta.
That's research.
Okay, I'll cover it. Well, the past 12 to 18 months have really been shaped by the high rates of inflation. So from a tenant perspective, the cost of housing has really skyrocketed from an already high level. And on the investor side, we are going to see interest rates that are going to stay elevated. So we have to become creative at how we can create affordable housing and still be profitable on an investor perspective.
Right. Matthias, what has it meant for Greystar over this past little while?
We are in the middle of a real residential drama. My daughter, she tried to find an apartment in Berlin for 1 year. She had to move, I think, 8 times until she found something, and that was more a situation of luck. So it's a situation of under-renting. Somebody else grabs money, but it's not reinvested into residential. So we have to do something against that. Greystar has the ability from a capital perspective to have an influence on that, and that's the key thing. In the past 12 to 18 months, all the projects, or lots of projects, could not get started into or brought into construction because from a financing perspective, banks expect much higher equity rates, and the developer cannot provide that equity, so they are stuck in having bought a piece of land, not getting the finance and not getting the building under construction. So they need to realize losses, and this is a bit historically a problem in Germany. Before you realize your losses, you better do nothing, then you cannot make a mistake. And everybody's hoping on the better times, but after a few years of hoping, we should face the reality.
And what is the reality? I want to hear Dave, for example, tell us what's going on in new build. What is the reality of your business day to day?
Well, the reality is that we have to build like 1 million newly built houses in the Netherlands the coming 10 years. So that means 100,000 newly buildings each year. But we never get those numbers. So I think we would be happy if we built 60,000 newly built homes in the Netherlands. So I recognize what Matthias says, and that's really a problem for people who wants to buy a house. We just don't build enough, and we don't have a really trustable government, and new elections coming up, and we'll have to see what kind of stimulation regulations we take to build actually those 100,000 newly built homes each year.
Yeah, the housing crunch seems to be happening almost everywhere. But are there any differences you see in European cities where it's better or worse? Is anybody getting it right? Is anyone dealing adequately with the housing crunch?
Well, I'm a fan of thinking positive. So not really German.
I wasn't going to say, but...
At least in new constructed apartments, we do not have rent regulation, which is a big advantage in Germany compared to the Netherlands, where you have that. So it does not destroy new construction, the rental protecting laws. So this is a positive thing. If we get developments under construction and in the leasing, then we are able to get rents which cover the construction and land costs. So that's positive.
Okay, we'll take the positives where we can find them. Samantha, I want to know in terms of what you see in the data for demographics and demand. Is there any relief in sight, and where are things trending?
I think that on the demographic state, especially in the UK, it's a boom that's coming. We're not addressing it. I'm sure Tom's going to back me up with lots of stats fairly soon. I mean, we're not delivering near enough the amount of stock that we need, but equally we're not recycling existing stock as well and encouraging people to move, because in the senior living space, it's more of an emotive move. There's people, they don't want to realise that they actually need to move. And what we need to be doing is actually building and presenting new build accommodation that people actually want to move into, rather than they have to move into because it's badged retirement.
Right. And as you mentioned senior living, I want to ask Tom about that. What are the trends kind of underpinning activity there? And where do you see opportunities?
Yeah, I think there's a couple of things at play. We're seeing quite a big cultural change across Southern Europe. I can count on two hands, I think, the number of senior living schemes that are in Spain at the minute. But we are seeing a big cultural shift to attitudes towards senior living from older generations in Spain, in Italy, and other Southern European countries, which presents, I think, a huge amount of opportunity. In those markets that are more developed, I think there's a big re-evaluation coming of what customers really want from senior living and what the difference is between what they can afford to pay and what they might be willing to pay. And certainly in the UK, we've seen quite a big rebalance of those two factors over the last couple of years.
Great. Is anybody else active in this space and wants to elaborate on what Tom has said on senior living in particular?
Well, in the end, we are constructing micro-living and also student housing, which is just a little bit more micro than the typical hybrid models. But in the end, it's about the special needs of the tenants. And when I think of senior living, there's also a very defined special need. And in the end, it's student housing for older people with different sort of amenities and a different sort of services. But in the end, it's an operational asset, and this is something we can run. We just have to adapt it a bit.
Right.
And the need is fantastic. It's huge.
Yeah.
I think from an investor perspective, and I'm just going to use the UK as a base at the moment, it's been very much of a sale-led product, whereas investors are used to rent. Institutional investors are used to student housing, BBSA, build to rent. They want income, and I can see more of a shift towards the rental market coming. On a more practical level, if you're aged 70 plus, why would you want to tie up your capital? Why wouldn't you just want to rent? So again, as Tom was saying, there is a cultural shift coming. I mean, fast forward, we're very much talking about now. If we look 20 years forward, okay, I'll use me as an example. In 20 years' time, I won't be looking to buy a senior living asset. I'll be looking to rent, free up my capital. I want to be more transient. I want to travel more. I don't want the maintenance responsibilities. I just want to live and enjoy. Yeah. And I think also there's coming a more of a focus on health and well-being, which is sometimes we forget. We think about retirement, and retirement is usually followed by care, whereas maybe we ought to be rethinking retirement followed by well-being and lifestyle, then care if needed.
Right. Dave, did you want to add to
the
that?
simple thing in the Netherlands is we don't build enough houses for our senior citizens. So what happens? They retire and they want to leave the house where the children were growing up. But like if they can't buy a house for seniors, then they got stuck in the house. So that's not good for the housing market, because people are waiting for a house where they can live with children, but the senior citizens are living in it. So that's really a problem. I think product developers have to build more houses for our senior citizens from high quality, because they are used to high quality and they're not ready to move to some small apartment with no elevator. They really want a high quality apartment or house, and that's a real shortage of it.
That's right. They may downsize a little bit on the space, but don't necessarily want to reduce their quality of life, as you said. Let's talk a little bit about the investment side and where money is coming from and into. Britta, do you see the living sector in Europe attracting fresh international capital, and if so, from where?
Yes, certainly. The living sector is one of the most stable sectors there is. And especially being in Europe in a very reliable political environment, this is attracting capital from across the globe. And there is fresh capital, at least interested, even if the investments are not countable yet in terms of research data. There are talks with capital that's coming from Asia, that's coming from the US, also Middle Eastern capital. So it's the European living market is seen as a very stable anchor across the globe. And this will, I would say in 3 to 6 months, I can see this in my research data. At this point, it's talks and very interested talks about the segment.
Great. Tom, does this fit with what you're seeing?
Yeah, absolutely. I think we're seeing lots of interest from the US, both in Europe and in the UK across the living sectors. And just speaking about the UK for a moment, we're seeing a number of UK investors looking to replicate some of what they do in other parts of Europe as well.
And Dave, you've talked a little bit already about the Dutch market, but if we can return to that, and you're kind of at the sharp end there on the financing side with the mortgages, you've talked about the massive pressures that the market is under. What does that mean on the financing side?
Well, on the financing side, so we provide mortgages for customers who live there, so there's no problem with that. We just buy our money at ECB and then we sell it to our customers. So that's not a problem. But the problem is the project developers, they are making different choices now. They're going to choose for return on invest instead of venue. So they think twice before they buy an expensive piece of ground. And they can build houses with a lot of regulations, and those regulations make it for them okay, well, maybe it takes about 4 years to develop something, and I have to invest those 4 years, I have to pay the ground already, so maybe it's getting less interesting for them to buy the ground and to build houses.
Right, and I want to talk a little bit also about repurposing. This one for you, Samantha, but others may have a view on this. Is this an opportunity, and can this help kind of resolve some of the supply and demand problems?
I'm 100% on the repurposing because I think we touched on earlier on the panel. We spoke about people wanting to downsize when they come into senior living space. If you look at the two ends of the spectrum, when you're a student and you're just starting out, you tend to have a smaller accommodation. You then move to a large accommodation to a family, and then effectively you're going back down the other way. There's significant opportunity, especially having regard to ESG, decarbonisation, or repurposing maybe existing housing student stock, but equally build-to-rent stock as well. Sometimes where you've got consented stock that might not be, no longer suitable for build-to-rent. Why could it not move into senior living, for example? Likewise, if you look at the other assets, say as offices, a lot of the companies used to have their head offices close to the town centres. COVID changed a lot of our occupier sentiment. And those buildings are now left usually vacant or not really sort of fit for purpose. And we know planning for a new build is challenging, so maybe it's a time to start looking at the existing stock, existing portfolios, working out where you've got your fund lengths, lease of lengths, and working through the timeline so you can actually go and get planning and start to repurpose these assets rather than starting from scratch each time.
Great. Anyone else want to add to any of that on the repurposing side?
Well, I think in general it's very interesting, and we should do that much more. The problem is in detail to get a conversion from an office building, for example, into a residential asset. It's quite tricky on the one hand from the technical perspective, but even more difficult it is to change the zoning from a commercial use into a residential use that can need 5 to 10 years easily, and that makes it so difficult. And commercial residential leasing is not the big favor of municipalities right now, so it's easier to build something new.
Right. Dave?
Yeah, I think repurposing in the Netherlands is also very important. But the thing is, it's not only repurposing to a house, but they also have to make the house very sustainable. So it at least has to go to label A or A plus and better. So it's an extra investment you have to make to repurpose it. And then, there's a price.
Right. And I'm curious, so we have a lot of obviously challenges in the market. I want to hear what and where you're bullish on. So I want to ask each of you, in terms of geographies and sectors, where do you think is hot? Where should the money be going? I'll start with Matthias.
Well, I learned from our equity raises that all the money that historically went to the States is stopping in front of the States. They go left to Europe and especially to Germany. So we have huge amounts to invest here. And it's just, when you have such a huge demand for residential, it gives the stability of cash flows into your portfolio. And this is something what investors like. They don't like insecurity, instability, and equity is quite shy. So in Germany we have a law, we have independent judges, and this is not everywhere the same.
Right. Good. Tom?
I'm going to be slightly biased and say healthcare and senior living is a great place to invest. The three markets across Europe that we're seeing at the minute, UK, Germany, Spain, I think if you ask most people, they'd come up with a similar answer for that asset class. I know when we started Carterwood, we absolutely bet on the long-term demographics of the healthcare market. So, if I were an investor, I'd recognise that bet as well.
Great. Britta?
Well, I have to answer this from a research perspective. I would pick all the markets, the metropolitan areas that are shifting, that are going from an owner-occupier market in terms of housing towards a renters market.
Right.
Germany has always been very strong in terms of the share of renters here, but there are other countries where this is shifting right now because households can't afford to buy apartments. And those are the markets where you will see very strong growth in the segment and very stable rental growth coming in the next years. So that's where I would put my money.
Great. Samantha?
I think it's safe to say location is hugely important, especially if it's a sector that people aren't involved in already. They probably want more of a landmark city, so they know where they're going. But in terms of, I guess there's a lot of Middle Eastern money at the moment looking to go, especially into the established sectors, senior living sector over in New Zealand and Australia. I can see a lot of that money also coming across to Europe and the UK. But equally reinvesting actually back into their own countries because there is a significant deficit over there already. And they'll be looking at inspiration from the emerging countries to take back to theirs.
Great. Dave, I'll ask you, if you want to give a view on this, you can, but I'll ask you a slightly also different question, which is, where do you find optimism in your market?
I was just going to say some negatives.
Oh, feel free to also add those.
Well, maybe, yes, there's something positive going on. So like in the Netherlands, it's still possible as a single person to stop a whole project from developing. Because if you don't agree, then you go to a lawyer, then you go to Raad van State. You can do all kinds of things. Makes 4 years. So now we have now a new Minister of Living, Mona Keizer. And she has a program which says, okay, you can object, but we're first going to see if your objections makes any chance of success.
Right.
And if it doesn't, we're not going to take it in, and then we can go through. So I think if that program goes through, it's very positive.
Yeah, that's a very good reform. I think maybe a model for some other places. I want to check before I carry on with another question or two. Does anyone in the audience have a question or comment? Nope, we're shy. Okay, if you change your mind, wave your hand at me. I'll be happy to bring you in. So we've looked a little bit about where we've come from, where the market is today. We'll do a little bit of future gazing. I know nobody really likes to make predictions, but that's also a bit fun for us. So I'd love to hear from all of you. We're back here on this stage a year from now, and we have a similar panel. What do you think we'll be talking about? I'll start with Matthias.
That's a good question. I think in the end, the topics will not change in 12 months. We will still stuck in the same situation, that we do not have enough land to construct, that we do not have enough apartments. When you think of what David said, the 1 million apartments that are missing in the Netherlands, well, I can tell you one thing. In Berlin, we have every year 30,000 new inhabitants, just in Berlin. And we are constructing at the moment 15,000 apartments per year. So there is a gap of 15,000, and this gap is increasing and increasing. So it's not solving the problem. So to really get the turnaround in the metropole regions, and it doesn't matter if you speak about Berlin or London or Paris, it's everywhere the same situation. We will still have the same next year. Right.
So we'll be where we are today, more or less.
I'm afraid.
Tom?
Successive UK governments have been promising to build 1 million houses a year for as long as I've been alive, and that's not been achieved either. I wonder a couple of things that we might be talking about next year is regulation in a lot of the living sectors. We have some really new and evolving concepts that are being invested in quite heavily. And I wonder if regulation might start to alter where some of that money is directed. And the other thing I wondered was whether some of these sectors, and I think, Matthias, you referenced it earlier, are quite close to one another, whether we might see platforms start to expand across multiple living sectors rather than having co-living, senior living, residential. I wonder if we might
it's
start
about operation in the end.
whether we might start to see a bit more collaboration between those and operators operating across multiple asset classes.
Do you think they can be put in a bucket together?
It's probably a slight oversimplification, but they are not totally alien concepts. So I think a good operator with the right people who do have the experience, there's no reason why you couldn't make a success of 2 or 3.
Great, thank you, Britta.
Actually, I will add on to this because I think fund strategy is changing, is shifting in many houses and for many asset managers who previously only had pure residential funds. And those don't yield the attractive return. So you have to spice up your return by adding more risk.
Right.
And adding different types of living strategy. So that would be senior housing, that could be micro living, it could be student housing, but mixing it up so that you can actually yield the returns that are attractive to the investor and then still have a component of affordable housing that the population needs.
Great, thank you, Samantha.
I think on the living sectors, from an operational point of view, the cash flows are actually remarkably similar. Yes, they flex a little bit, and some you probably have more staff costs for senior than you would in student. I think brand is going to become ever more important. Identity, the product. I think we are less guilty of it in Europe. We're quite guilty of it in the UK. Is that we actually overcomplicate something. We use about 5 words when one could do, and we've just fundamentally got to keep it simple. At the end of the day, it's an investment product. Income, rent, yield. Don't overcomplicate things.
And I'd ask you a slightly provocative question just on the UK. Tom mentioned every government says the same thing in the UK. If we have some maybe more extreme changeover of government, what would that do for the housing residential policy in the UK? Or for all the bombast, would we see more of the same?
For me?
Yeah, go on.
Oh God, how long have you got? I think it's too complicated in the UK. I think if you put the entire government and ask them where they actually really wanted to live in 10 years' time, you might get a very straightforward answer. But at the moment, there's no clear one answer to it.
Yeah, thank you. Dave?
Yeah, in a year from now, I hope 3. The first one, I hope ING is still market leader in newly built mortgages in the Netherlands. We're going for that. But the 2 serious things, I hope we have a steady government who really, really supports building new houses in the Netherlands, financially, but also moral support. And the other thing is, I think we have to make a development in industrialization of building houses. So we have like house factories who can build like 100 houses a week. And we need to make more development on that. Because that means we can build houses much quicker and put them on the place where they have to be. So I hope in a year from now that's going to have a real development.
Great, thank you. Yes, sure, a question here.
Just on this question of asset classes and different asset classes, very interested in how you see hospitality. Is it part of the living sector or is it too different?
In our funds, it's actually, there are some funds where there's hotels where hospitality is part of the living sector, yes. And that's also in an effort to increase returns on living investment. And not just having the small yielding residential returns in those portfolios.
And maybe for the others, do you consider hospitality as part of the mix, or is it too different of a beast?
I'd say it's actually quite similar because for senior living and healthcare, you're just providing longer term stays rather than short term stays.
Right. Matthias?
I think hospitality is very important for the big cities to have people coming that are only temporarily there on a short term. We try to avoid service apartments, which is in my mind really hospitality. It costs us too much full-time employees, and it reduces the cash flow too hard. And in the end, what we try to create is residential space, filling a gap. I think hospitality is a little bit beside. It serves a different need, and which is also important. And I'm a big fan of separating it. This is hospitality and this is living, and we should not have too much short-term living in the normal residential market, because that creates problems in the cities.
Dave, were you wanting to?
And I have a question for the panel. So, like, are people, do they want to pay for hospitality?
I think it depends on the affluence of the residents. A lot of people will want that add-on benefit. Certainly, as you get older, you will need the food and beverages services. Wellness, again, yes, it's important, but as with anything, it comes down to viability and cash flow. I mean, there'll be some areas, again, some areas where it's of less affluence, so you probably would put less wellbeing and hospitality services in, or look to provide it within a local centre so everyone has access to it. If you look at the other end of the market, there may be more niche and people will want their own bespoke hospitality offering. So it's very much on a case-by-case basis, I'd say.
Thanks. Was there another question? Did I get that wrong? Okay, no, I think we'll end there. Thank you for the question. Thank you for joining us both here in person and online. And most of all, thank you for a fantastic panel.